Talk about oil. Let's talk about geopolitical risk. Oil posting its best week since January. Trump sort of saber rattling more around Iran, but there doesn't appear to be a war premium built in. Let's bring in RBC Capital Markets Global Head of Commodity Strategy, Helima Croft, obviously also a contributor. Helima, thanks for joining us. Listen, if I'm reading your notes right, and if I'm listening to the president correctly, he's basically saying to Iran, do what we say, or we're going to do something. That's a big something.
That's a big something. And what we're hearing is that President Trump has delivered a message to the Iranians essentially saying, like, look, you have a limited window to take our offer to restart nuclear talks and come up with some type of settlement, or we may pursue military action. At the same time, we've had U.S. strikes on Houthi targets in Yemen, which President Trump really indicated was a warning to Iran. And then we have more sanctions. We had the sanctions this week targeting the independent Chinese refineries, the teapot refineries that take the bulk of Iranian crude. So we really look like we're ratcheting up to some type of endgame scenario when it comes to this whole relationship with Iran.
I guess the question is, we're at 68. Some people might say, well, why isn't oil higher with sort of what you just laid out? Or I guess, Helima, is another way to look at it is there is plenty of oil in the world. The Saudis could put more on at any time. And maybe it's because of these things that we are at 68 and not 58.
Well, I think there's also the fact, Brian, that we are, into a multi-year conflict in the Middle East, and we have not had any physical disruption of oil. We've actually had the Israelis and the Iranians trade missile fire, and yet we've not had any action involving the Straits of Hormuz. So I think for a lot of oil market participants, they really want to see something that materially impacts oil supply before they start pricing us in. So do pay close attention to what we're seeing in terms of these new Iran sanctions. We had sanctions last week as well on Russia. Are we actually going to see real enforcement, though? Because I don't even think you needed the new sanctions to take, potentially 750,000, a million barrels of Iranian oil off the market. It really comes down to what is the appetite to enforce those sanctions.
Helima, is this a sign that the world thinks, or the U.S. thinks, that GDP is coming in? So we stated, as Brian said, a couple of reasons why oil should be higher. But if those things resolve, then oil should be back at 45 or 50. I know it sounds as if that is a world away from us right now, but is this some type of a bet based on a recession or GDP coming in?
I think part of the reason why oil has been, struggling has been absolutely the concern about recession, about the impact of demand of tariffs. Like, what is this going to mean to Chinese demand, the all-important center of demand? So I think you have these sort of push-pull in the oil market. You have sort of broader macro concerns, or at the same time, when the market starts to focus on potential supply risk, again, we talk about these sanctions. If President Trump were to enforce these sanctions on Iran, that could be a significant amount of Iranian oil off the market. And it becomes a real question about, what is the backfill? How quickly could U.S. production really ramp up? U.S. production ramps up at a certain price point. It doesn't ramp up at $50. Also, the issue about, is Saudi Arabia looking to put more barrels on the market? They came out this week, OPEC Plus, announcing a plan to essentially have the big producers provide compensation. So essentially pull back some of their production. So it doesn't look like right now there's a lot of appetite from OPEC to jump in with more barrels. So we are watching this story very closely.